So really within 6 months, it did a six bagger. And so I believe that's what will happen this time too. I mean, gold is really good at smelling out monetary debasement. It just knows when it's coming, I think. And so here we are, we know it's coming. When it hits, Bitcoin's going to go from, 80, 90 to 270 or 300, in my opinion.
Lepard begins by addressing a subtle but important shift. Bitcoin's correlation with the Nasdaq is fading. While 3 days of divergent price action don't make a trend, the direction matters. Bitcoin rising while equities fall hints at a structural evolution, not just another speculative trade. In Lepard's view, Bitcoin is increasingly behaving like a neutral reserve currency rather than a pure risk-on asset. This transition doesn't happen overnight. It happens slowly, quietly, and often during periods when price action feels disappointing relative to expectations. Before we go on, just a quick reminder: liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
Bitcoin correlation with the Nasdaq and as a risk-on asset has been fading over time. There were a few days last week where the triple Qs were down and Bitcoin was up, and that few days doesn't make a trend. But the point is, it is, in my opinion, it is a neutral reserve currency, and it will become that. And the sentiment in it right now is just absolutely dreadful. I mean, you guys probably saw the New York Times article attacking Saylor, to me, I mean, we're only 100 and some odd days away from an all-time high of 124. We're still in the 90s. I mean, it's not like this thing's been a disaster, and yet the sentiment, it feels to me, I hang out with a lot of Bitcoin people, and it feels to me they're all, crying in their beer like it's just horrible that it hasn't gone up much quickly. And, if you look back at this thing, I mean, the best way, I think, Mike, and you would agree with this, having a lot of experience, the best way to evaluate any asset is to look at the long-term history, what the asset's done in the past. And if you look at the long-term history, what Bitcoin's done, it really rewards patience, and it rewards it in a funny way. And just when you're about to give up, that's when it works. And it goes up. I mean, let's go back and examine the March 20 example, okay? Because that was the last kind of risk-off event and then a big print. And so it's instructive when you're looking at that and you compare it to Bitcoin and gold today. So when Powell pivoted in 2019 because the repo stuff blew out, he stopped tightening, he started loosening, he cut rates, and then COVID came along, and then he really printed and cut rates. Gold went from 1,200 to 2,000, and everybody was happy in gold land. My stocks all went up. It's all good. Bitcoin was just locked in between 5 and 8, just couldn't go anywhere. And it stayed there. And I remember very clearly, because I own both. I'm in both communities, and the crypto people were like, Bitcoin people were like, what the hell? Gold's ripping, our thing's not. And then suddenly, July, August, Bitcoin woke up and bam, it went from 10 to 60. It went up 6x, like really quickly. So really within 6 months, it did a six bagger. And so I believe that's what will happen this time too. I mean, gold is really good at smelling out monetary debasement. It just knows when it's coming, I think. And so here we are, we know it's coming. When it hits, Bitcoin's going to go from, 80, 90 to 270 or 300, in my opinion. So that's really, the pattern that it's shown in the past. And I think that pattern will continue, but you've got to have a very long-term perspective on it. And there's never really been an asset like this. I mean, Bitcoin, Mike, you very prudently pointed out that silver, we can mine more silver. We've got an algorithmically fixed cap on the amount of Bitcoin. So when people decide they got to have it, we're not creating any more of it. It's perfect in that respect. It's perfectly inelastic, right? Higher price does not create more supply. And that's why it trades in this wild animal-like fashion. And so I fully expect the next top will be 200,000, 300,000, 400,000. And by the way, from there, it'll correct another 50 or 60% again, come back down into the 170 range or something. I mean, it's like Amazon when it was getting adopted. I mean, it's either Bitcoin's going to the moon, everybody's all pumped up, and crypto bros are driving you nuts, or Bitcoin's dead. And it's on its way out. Like, I mean, right now Peter Schiff is out there doing victory laps. Like, see, the bubble's burst. I told you, gold's crushing it, and Bitcoin's going to zero. It's like, okay, Peter, let's give me another year or two. Let's see where we are. In the last 5 years, Bitcoin has outperformed gold. Last 5 years, gold is up compound annually 20%. Bitcoin's up 23% a year. And in the last 5 years, the S&P is up 12%.
But I'm just,
So they both beat the S&P. Yes, gold beat Bitcoin this year, last year. But on a 5-year basis, Bitcoin's up 180%, gold's up 150. And on a compound, those numbers compounded, Bitcoin's been compounding at 23%. If the stock market cracks, and things start going down, the thing is, we're running these record deficits, and everything's completely where it is. It's all messed up right now. And this is with a healthy stock market, right? The last 2 times the stock market cracked, you have all kinds of, spending goes up on social programs, etc., and tax revenue goes down. So the deficit gets even worse. And so, my sense is if the stock market cracks, maybe for a brief period, it's a deflationary thing. Very much in March of 2020, the 10-year traded down to like 50 basis points for a few days. Remember that? It was nuts, right? So you can get a deflationary impulse for a brief period of time. But then, of course, we know, since the Fed has vowed to fight deflation, and since they fear it more than anything else, and they don't want to have another 1929, we know what happens. The policy response is, print money full blast, buy everything in sight. We're not going to let that happen, right? And but that is what makes trading this year very tricky, and it's what makes things like Bitcoin as an example. I mean, I love Bitcoin, I love MicroStrategy, but there's a model. I mean, I rated about a 35% chance that we have what you've described, Mike, which is a deflationary impulse, and Bitcoin goes to 60. I mean, if it does, that's an enormous buying opportunity. I mean, I'll be selling gold and silver and backing up the truck, but the point is, we just don't know. I mean, the system is so broken, and the policymakers are so corrupt and stupid, but yet we know certain things that are true, which are they will not let us fall into a long-term deflation like 1929 if they have a printing press available to them.
Zooming out, Lepard dismantles the narrative that Bitcoin has failed because gold has outperformed recently. Over the last 5 years, Bitcoin has compounded at roughly 23% annually, gold at about 20%, and the S&P 500 at around 12%. Both Bitcoin and gold have beaten equities over that period. Short-term leadership rotates, but long-term trends matter more. Bitcoin underperforming gold for a year does not invalidate its thesis. It fits its historical rhythm.
I see it as the moves in gold and silver are really quite historic. I mean, kind of stunning. Silver up 150+% last year, gold up 60%. And they seem to not be relenting. I mean, this morning, gold was up another 70 or 80, silver another $3. I mean, and I know a lot of people think, well, this looks like a bubble. It's the same as the Hunt brothers and same as 2011. It's going to collapse. It's a parabola. And I don't really see it that way. I see it as actually it's funny, people call this the monetary debasement trade, and I get anger. I react to that with, it's not a trade, guys. It's a monetary debasement secular trend that's going to last for decades. And so, I had some Bitcoin friends saying, hey, should I short silver? It seems awfully overextended. And my reaction was, boy, you ought to be careful, because you don't really know where the top is, and what's really going on, and this is true, and the prices would not be doing what they're doing if this was not a fact, is that there's a scramble for physical silver. You can see the deliveries that are taken off of the COMEX and how they've grown this past year. And then you can see the deliveries taken out of London, same story. They're large. I don't have the numbers right in front of me, but you can see the premiums people are paying overseas. I mean, the silver price in China and the silver price in Dubai are substantially higher than the COMEX price. And I mean, like 10%, 8 to 10% higher. And so this to me indicates a real tightness in the silver market. Now, is it going to go on forever? I don't know. But I do know that silver was suppressed for a long, long time, and that 50 was a top that held for, 40, 50 years almost. And when you break through a top that's been held for that many years, you don't just go up 50%. You can go up a lot. And that's kind of the process we're in. And to me, I mean, both of you, I think, will agree that this is all occurring against the backdrop of, huge monetary debasement. It only looks like it's going to get worse. I mean, the most notable thing I've focused on is Trump's aggressiveness in so many areas, and you can debate, the good and the bad of that. And I think there is some good and there's some bad. But one thing's for sure is none of this is free. He said, the defense budget has got to go from $1 trillion to 1.5 trillion. Well, okay, where's that going to come from? And I think we all know the answer: the printing press. And so I think that's what the metals are reacting to. So we are in the fourth turning, and we know it because everyone's screaming at everyone else. And this is what happens when you break the money and you make the system unfair. Everyone gets really tribal and gets pissed off, and it's awful. It's not what this country was all about for so many years. It's gotten really, really bad. And I think it really comes down to just a simple issue, which is the loss of trust in our institutions and the rules of society. And it's because we've watched government and so many institutions abuse our trust. And just case after case. I mean, the vaccines are effective, the vaccines are safe. I mean, the list is as long as our arm. And so, thank God for the internet. Thank God for people's ability to broadcast the truth and people's ability to discover the truth by doing their own research. And people are pushing back, and rightfully so. Mike, I agree with you. The stock market is an enormous bubble. And I also agree with you. There will be a time when the price of silver will come down, when there'll be a supply response. I would just add, and this dovetails a little with what Dave said, it's unbelievably hard to start producing silver from scratch. I mean, we've underinvested for 20 years in this industry, particularly since 2011. The CapEx going into this, Tavi Costa's got some great charts on it. The CapEx going into the silver industry has been completely starved. And, you can actually see Mexico and Peru, which are two of the biggest American producers, or, the American continent producers of silver, I've seen their production decline substantially over the last 10, 15 years. And so it's going to take a lot of time, from the time when you find a deposit to the time you have silver coming out of the door, that's 10 to 15 years. So, at the margin, yeah, everybody who's got a mine operating, they'll try and, they'll run it 3 shifts. They'll, maybe drill a bit more. They'll add some capacity. I mean, don't get me wrong, supply will go up, but not as quick as, a lot of people think. And so I think it's it's a mug's game to say how high is silver going to go. I mean, if you want my opinion, I think it's going to go to about $500 an ounce on this cycle. So, if you're short it, good luck. And I get there because I think gold's going to go to about $10,000 an ounce. And I think you're going to have a 20-to-1, gold to silver ratio, which you were alluding to earlier, Dave, that silver is increasing vis-a-vis gold. And, and everybody listening to this probably thinks I'm nuts and probably thinks, how can those numbers possibly be right? And the only thing I would say is it's because of all the paper silver that got created. I mean, it's really amazing to me. You can go and look at the exchanges, and we mine about 800 million ounces of silver a year. The world, that's the entire world, mines about it. And, we get scrap silver equal to about another 200 million ounces. And that still leaves us in a deficit because we're using about 1.1 billion ounces. And, we're running out of grandma's tea sets to melt down. That's the scrap silver. Right? And I know that because I go to my local coin dealer and he's got tea sets stacked up. And I think he probably pays grandma 50 cents on the dollar, and then he sends it to a smelter and they pay him 70 cents on the dollar or whatever for the market price. But I guess the point I'm trying to make is, silver is tight, and I don't think anybody really knows how high it can go. And I'm not suggesting you buy it here, and I'm not suggesting it's a lock that it goes to 500, but I think it's a lock that it goes to 100. A couple things I will say. We will never see 50 again, in my opinion. Never. 50 is long gone. We broke through it. We could correct back to just above 50. That's not unusual in any bull market, as you know, Mike. You get a breakout, somebody correct back, and you test the breakout. But I think we're going to live in a new reality where probably 100 is going to be the low end, and I don't know what the high end is going to be.
Lawrence Lepard's message is not about chasing price or predicting exact tops. It's about understanding cycles, incentives, and supply constraints. Bitcoin does not move smoothly. It frustrates, consolidates, and then explodes, often when belief is weakest. Gold moves first. Silver exposes the cracks. Bitcoin finishes the move. Those who demand immediate gratification are shaken out. Those who understand the long game are rewarded, sometimes suddenly, sometimes violently, but almost always unexpectedly.